Hey, what's up? Welcome to Degen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the chart behind me, which is of the Gold Miners ETF, ticker symbol GDX. And so the last time I went over the gold miners was on December 30th, so after the year of 2023 had closed in the markets. And that month closed at a price of $31.01. And during that video, I went over these lines that I have up on the chart. This is looking at the monthly time frame. And since January just closed today on January 31st, Wednesday, as I'm recording this, I thought it'd be nice to kind of do a follow-up and see where the price is at. And so, as I had mentioned, last month closed at a price of $31.01, which January opened slightly above that at $31.01. And if we actually look at the candle for the month of January, that looks like it is a bearish engulfing candle because it opened slightly higher, just 3 cents higher than December's candle, and then closed well below. So that is a bearish engulfing candle. It does suggest that there could be further downside. There likely is. And in last month's video, I also mentioned that while price was up here, that $29 could be tested again, this horizontal line here. And what we saw was a breakthrough $29 with a close for the month right around 28 at $27.94, being up just slightly in the after hours, but being down, let's see, almost 10%, just over $3 over the course of January. And so if we do switch over to the daily time frame, what we can see here is the basically, let's see, December 27th was this high here. It looks like there's kind of a micro double top there with those two wicks up. And let's see, the 30th is when I released that video. The last trading day of December was the 29th. So after there had been this pullback. Then we saw a gap down, some of that filled, but still leaving a gap to the upside, as well as another gap here, this gap to the downside, but that has since been filled with this big candle on January 24th, coming down almost 2% on the day, and then we got some consolidation following that. And it does look like $29 was tested on January 24th with a high of $29.04 being rejected at that key level and then coming down. So I do think that there might be another test at $29, but I suspect that it's not going to be able to break above that level. I do think it will be rejected and that we will continue down. And so to kind of go over that and some things that I see in the chart, again, looking at, actually, I think I might do this on the weekly time frame. If we look at the candles here, I'm just going to do a Fibonacci retracement from this low of $25. Actually, maybe I want to do this on the daily time frame. Yeah, I'll do it on the daily time frame, but using the same low. So this is $25.21. That was hit on October 4th. And then we have the high, the recent high, that was, let's see, at a price of $32.35. So got it marked just right there. And it does look like, so we can take some information from this Fibonacci retracement to get an idea of how low the price will go. And so the 50% retracement, right where the cursor is at a price of $28.78. So, it's not so great that price closed below that for the monthly close. So that does suggest that the 50% retracement at $28.78 will be acting as resistance right around $29. And very interestingly, what was the high of today? The high was $28.77, so just a penny lower than that Fibonacci level. So I find that to be pretty interesting. We did see a pretty big rejection there, and it has pulled back to the 618, which is at a price of $27.94, which happens to be the close for the month of January, closing on the day of January 31st. So I think that's pretty incredible. And so I'm very curious to see if that level will continue to hold as support. I suspect it will not, because this does seem like bearish consolidation getting rejected from $29, $28.78 multiple times. And I do think that it will break lower than $27.94, likely to test the 786 retracement at a price of $26.74. So I'd keep a lookout for that, but also on the bigger time frame, if we look at the monthly candles again, we can see this uptrend that has acted as support in the past. Returning to that level would be right around $25.50, maybe $26. So that is something to keep in mind if we do break below the 786 at $26.74. But, those are just my thoughts. If you found them helpful, make sure you like the video and share your thoughts in the comments down below. And make sure you subscribe to the channel for more videos like this. Thanks a lot for watching.